Bitcoin is currently breaking down from one of the major trends that it set all the way back in January at the start of this year. So with a Bitcoin breakdown on the cards, what does this potentially mean for altcoins heading into September, which is historically the worst month for cryptocurrency? In today's show, we're going to be going through the data to break down what's going to come next for altcoins. Is Bitcoin going to continue to lead the pack? And are alts any chance of recovering anytime soon? And of course, off the back of that, when is the right time to buy? Or is it simply just worth sitting out of the market right now and letting things play out its course? We're going to answer all those questions and more in today's show. Smash a like button if you're excited. It's going to be a massive stream. And let's just get straight into the metrics here. So we can see right in front of us that Bitcoin is along this major trend line that it is just starting to break down from at the 28K level. Now, it isn't a confirmed breakout yet because I am looking at this on the daily, and there's also a similar chart on the weekly that I am eyeing. So let's see how it reacts over the next couple of days. Sometimes Bitcoin does wick under this level, as we've seen back in June and back in March, but we do want to see where Bitcoin closes here, because if we get a close below this level, then you can start to target the 200 MA on the daily, and of course that major support level at 26.5 as potential targets for Bitcoin. Once again, not panicking just yet, but we do need to see how price action reacts around this area if we are to get a continued breakout. Bitcoin, however, is not operating in isolation. You can see the NASDAQ 100 right now is also breaking down after it had a really nice rally. Since the beginning of the year, the NASDAQ ran up 49%. So a lot of investors are starting to panic and get worried about these recession fears that are, spreading around the market. But what you have to realize is, it rallied 49% and it's had a 7% pullback. In my opinion, it's very normal behavior for these markets, but it is interesting to note from a pure technical perspective, we are now starting to get a trend reversal, which is being exemplified by the breakdown here of this diagonal trend on the NASDAQ. And we also can see a similar trend forming on the S&P, with it also just starting to show signs of weakness, also breaking below its diagonal support. Of course, Bitcoin being a risk asset and largely correlated to these assets has also seen a pullback in tandem with the stock market. And it's quite interesting. When the stock market was rallying, Bitcoin was doing nothing. It was moving sideways after its spot ETF rally. But now that the stock market's starting to pull back, well, this is where we're seeing the Bitcoin Pearson correlation, which is a measurement of Bitcoin's correlation to equities and gold, actually starting to tick up, meaning that Bitcoin is now increasingly becoming correlated again with the stock market after the stock market has had a correction. Kind of sucky that it didn't hold up relevant strength with stocks coming down, but nonetheless, that has been the case for Bitcoin starting to show a little bit more strength. So what does all of this mean for altcoins? Well, what we've seen over the last few days is dominance beginning to spike again, and a lot of altcoins bleeding heavily versus their Bitcoin pairs. So just going on to CoinGecko at the moment, and we're going through this list, we can see that many of the major alts for the week are down a lot more than Bitcoin. So using Bitcoin as a reference, down 4% alongside Ethereum, we can see like Solana down 6, Cardano down 8, Doge down 11, Polkadot down 5, Polygon down 12. Like a lot of these are in the double digits, Uniswap, etc. We can go down the list and see most of them are between like 6% and 12%, even though Bitcoin's only down 4%. So the altcoin market is showing relative weakness versus Bitcoin on these dips. And I think due to the major trend of dominance, as you can see in front of you, the trend for dominance is clearly bullish. And as long as this is the case, altcoins versus Bitcoin are likely to continue to bleed for some time. We'll get into when this can reverse in just a minute here. But firstly, what is the reason for this? Why are altcoins showing relative weakness versus Bitcoin? Well, the first reason is when investors start to get a bit worried, when sentiment just starts to shift a little bit like it is at the moment, extremely risky assets like altcoins, they tend to be the first that investors sell off in order to protect themselves. So just a general de-risking across altcoins is what is currently being exemplified in the market right now. But that isn't happening in isolation. That's happening off the back of huge regulatory changes with the Binance lawsuit currently underway. We see they actually filed for an amendment of the SEC case. This is ongoing, and this is going to be a huge storm in the crypto industry that continues to brew for, I think, months and potentially even years to come. Now, of course, we will start to get some definitive answers on securities law throughout this case, but I think a lot of altcoin investors have started to de-risk just relative to Bitcoin ahead of some of the outcomes from this case. And we do think that we can see here a discovery storm may be brewing between the SEC and Binance as we start to see lots of documents being emerged from Binance. That's going to cause periodic elements of FUD. And obviously, there's still those big questions like what altcoins are securities, what altcoins aren't securities. The XRP case was in favor of the alts, and we did see a very nice response off the back of that. But I think the market's now realizing, well, there's still a little bit to play out on the regulatory front. Coinbase, however, looks slightly better positioned than Binance in order to beat this regulatory storm, considering the US actually allowed them to deploy their financial market futures fund, which is going to be eligible for US customers, meaning US customers will be able to trade futures on the Coinbase exchange, which is quite interesting. Now, which assets are going to be allowed, let's wait and see. But it's kind of weird. If Coinbase wasn't going to have a better outcome than Binance during their lawsuit, then why would the US approve this new exchange? Like, you got to ask the question. I think Coinbase, as a public company that has shown to be a little more compliant with US policy, is being favored, I guess, by the SEC. So those are two of the major reasons why the altcoins are performing worse. But there's also the major elephant in the room here, and that's the Bitcoin spot ETF. And unlike altcoins, Bitcoin has a direct supply and demand side factor that is driving its performance and drove its performance during that run-up that we saw last or July, just 1 month ago. And that's, of course, the Bitcoin spot ETF. So the Bitcoin spot ETF, because it's kind of like a Bitcoin native related catalyst, it doesn't have a direct effect on the alts until we see an approval, and then maybe we can start looking at an Ethereum ETF. But right now, the narrative is very much still with Bitcoin, with the spot ETF taking place. So you have a combination of things, investors starting to go more risk off as they just start to worry about recession fears, investors starting to go risk off in the midst of some of these lawsuits that we're seeing from Binance and Coinbase, and then also the fact that Bitcoin has favoritism in the market's eyes due to its spot ETF specific catalyst. And we can see these are some of the key dates that we have to watch. Of course, the next major deadline for the SEC happening on September 1st, and then some of the other deadlines now being pushed towards next year, like ARK, which is set to be reevaluated in January. So I doubt we do get a response here in 2 weeks in September from the SEC. I think they're going to kick the can down the road and delay it again, which could see things be pushed into October and maybe even further into November and early next year is what some pundits are anticipating. Percentage-wise, Bloomberg analysts still think the percentage of a spot Bitcoin ETF is over 60%, but we may just have to wait a little bit longer. And I think that's why the market's getting a little bit impatient now, and we're starting to see a sell-off from Bitcoin, because the biggest catalyst in the market that pumped the price of Bitcoin in June and July is now no longer a catalyst until we get a concrete change in terms. And that would obviously be an approval or a rejection of the Bitcoin spot ETF. So let's go back to dominance. Let's look at what's happening in the Bitcoin dominance to work out, look, what could be next for altcoins? Because there's history that can show us potentially a path here for altcoin performance over the next few months. So the first thing to note is that dominance did break above its major level at 48% earlier in the year. We, of course, have covered that on the show. Interestingly, it actually rejected off the 200 MA on the weekly at the 52% region. We did see a slight altcoin run, and then over the past few days, we've seen a little bit of a reversal. But what is clear here is that the dominance trend is still upwards. And until we get a concrete reversal, I mean, one can only assume this is going to continue for the foreseeable future. Now, could this end up being a reversal? Yes. But right now, it just looks like a simple pullback in dominance. And until you start to see a double top forming, I would be skeptical. I would wait to see how Bitcoin dominance reacts around that level. That's going to be super crucial. But what's happened in the past with Bitcoin dominance? Well, this red line here, this vertical line, this line and this line in front of us are the lines that indicate the Bitcoin halving. So the halving happened in April 2020, and then the next halving is scheduled for around March to April 2024. Dominance is interestingly following a very similar pattern this cycle versus last cycle. And although it's only one data point, I wanted to bring it to your attention. So we can see here in May 2019, dominance started to increase before reversing in September, and altcoins outperformed leading into the halving. We can line it up with this year being a pre-halving year as well. The exact same month, May, dominance started to shift to the upside, as we saw dominance shifting to the upside in 2019. And then we are also starting to see potential signs of a reversal taking place. Now, this isn't a confirmed reversal yet, but we know that the last reversal we got was in September, 240 days before the halving. This time, we can see that we are starting to reach that level. So will that mean that we pull back in dominance and altcoins perform from September onwards? I wouldn't be so sure, because although history repeats, it doesn't, although history rhymes, it doesn't always repeat. And I don't think one data point is really enough to assert that, okay, just because dominance followed a similar pattern last cycle, it's going to follow another pattern. Because last cycle, we didn't have the spot ETF. We didn't have all these regulatory issues. We didn't have recession fears. We did have recession fears around, the pandemic, but it was quite different because we had a quantitative easing environment versus a tightening environment now. So I wouldn't be so quick to draw a conclusion. But just broadly speaking, right, historically, dominance has shown to rally into halvings, and then altcoins tend to outperform post-halving more significantly. So although we did see an altcoin outperformance into the beginning of the halving, the real altcoin performance didn't happen till about a year post-halving. So I think any major big altcoin performance, although you may see a reversal pre-halving, the big moves will come post-halving. And that is generally what I think we can expect as traders, because Bitcoin dominance still being in an uptrend, I think you've got to establish that trend can continue. Now, how long will it continue for? Right now, what I'm doing as a trader is really tracking the ETH BTC chart. So this is a chart that I've had since the start of the year, and I've been tracking ETH's performance versus Bitcoin. And what we can see is that it has been in a downtrend basically since the FTX collapse last year. But this downtrend does have a support line, and the support line that I'm eyeing is the 0.055 level in tandem with the 200 MA on the weekly, which should also start to tick downwards as price starts to come down a bit more. So I think we're going to see a confluence of a few support levels at this 5.5 zone. And if that lines up time-wise with what we typically see with Bitcoin leading into halvings, this could mean that we see an Ethereum Bitcoin temporary bottom, because I don't know how long the uptrend will last, but at least a bounce around, let's say, October, November this year. Now, this is rough data. It could happen later. It could happen sooner. But the trend that we've been following has not really changed. So my thoughts on ETH BTC haven't changed. I think Bitcoin will continue to lead into the end of this year, and then we should see a reversal sometime, maybe towards November, maybe towards October, anywhere in this blue box here. And that should, we're going to get the signs at that point of a strong bounce, because we're going to see a strong reaction at this 200 MA. We're going to see a strong reaction at horizontal support as well. But what's very interesting about this is this timeline potentially lines up with the performance of Bitcoin, because Bitcoin typically has its worst month in September. So we can see that Bitcoin corrections have always happened in August/September of the pre-halving year. We saw it in 2012, we saw it in 2013, we saw it in 2019, and we're seeing it again now. And if you look at the Bitcoin monthly returns, September comes out as the worst month, averaging a -5% return, or a -70% total return for September. Every other month is positive. September is by far the biggest outlier here, with 6 of 6, the 6 latest months for September performance, all coming in the red territory. So if you do line that up with the chart here and just come to the assertion that September could be a red month for Bitcoin, then that also makes sense on the ETH BTC chart. Because if Bitcoin ends up dropping and altcoins have these risks that we previously discussed with the lawsuits and the sell-off happening, then we could maybe assert that alts will bleed harder than Bitcoin during this period, and this September sell-off could speed up this trend here, this scenario that results in us hitting these targets on ETH BTC. So if we want to just do a bit of maths here, to get down to this support level, it's around 12.26%. That could be the amount that alts, because ETH is synonymous with a lot of altcoins, bleed versus BTC. And that would also see dominance correspondingly push up into this 54% region, which is also a major resistance level for dominance. As we can see, it was support and may flip into resistance, because this was a previous key level for dominance. So pretty interesting that everything's kind of lining up around this September period to be potentially a period that altcoins bleed, but also a period where we see a reversal. So that is very, very interesting. Now, what I want to get into now is, if this scenario does play out, and if we do see altcoins starting to significantly bleed over the next couple of months and continue their bleeding, and then we do see a reversal, what are the best altcoins to accumulate for that reversal? So that's something I want to discuss now. What alts am I eyeing? Because of course, these are creating big opportunities. Altcoins bleeding versus Bitcoin. Every percent that they bleed is going to be an additional return on the way up. So the further an altcoin goes down, the more returns percentage-wise it's going to do on the way up. If you can buy in a rough accumulation period, because you're never going to get it right. But if you can time it in a rough window where you're getting close enough to the bottom, then you're putting yourself in a good position to take advantage of the multiples on the way up if you invest in quality. So I want to get into like what that quality looks like and some of the narratives that I'm looking at for this scenario, because for me, this period is an accumulation period. If we do get the altcoins bleeding a bit more, like I think we will, and if we do get ETH BTC starting to reach this support level and bleeding more, which I think we will, then I think that'll be a good opportunity to continue stacking altcoins. Yes, we're not going to time the bottom exactly, but if we get a general zone where we think that altcoins are good buys relative, to Bitcoin, keeping dominance in mind, then I think that could be really good buying opportunities, setting ourselves up for the next cycle. So let's talk about those alts. But just before we get into those alts, I want to give you a quick reminder that we're currently doing a 1 Ethereum airdrop every single week for liquidity providers on SmarDex. So SmarDex is a DEX platform that has essentially solved or mitigated the negative effects of impermanent loss. So impermanent loss is typically when you experience capital losses on your LP positions, when you have two different assets that don't move together in price. But SmarDex, they have a calibration mechanism which enables these LPs to actually retain their value relative to what you would have with a typical LP, where you would lose to impermanent loss. So it's, I think, attractive for LPs. And off the back of that as well, they've got huge farming multipliers. So we can see 10, 20, 30x multipliers on their farms, which are resulting in APRs of, pretty much the highest in the market right now. On their native pairs, it's 89 to 100%. On their USDC pairs, for like Arbitrum, for example, it's 23%. But we actually teamed up with them to do a giveaway of one Ethereum, one airdrop every single week for liquidity providers that provide a minimum of $50 liquidity into any of these pools. So if you do provide $50 into Arbitrum, Polygon, or BNB, any of the pools in any of those chains that I just listed, then you will be eligible, as long as you deposit a minimum of $50 into one of those pools, for our 1 ETH airdrop every single week. And I'll be doing my airdrop this week. So the link in the description to access that airdrop over on SmarDex. And good luck. Hopefully, I was going to say hopefully we get a winner, but we will get a winner because I'll be drawing it. But I hope you win. I hope, good luck to everyone that is getting involved in that giveaway there. All right, let's get on to my plan now. So the first thing I want to establish is that I buy Bitcoin and ETH every single month. I've explained this in previous shows. That doesn't change. The only thing that changes is the amount that I put in and the variability between Bitcoin and Ethereum. So when Bitcoin is showing strength like it has been recently, I've been DCAing heavier into Bitcoin. And when Ethereum starts to show strength, like we see in this chart, if we do get a reversal or a breakout of this diagonal trend, then I'll start to go heavier ETH on my DCAs versus Bitcoin. But my goal is to have a really strong Bitcoin and ETH portfolio. Now, onto the altcoins. I'm looking for altcoins that I really understand, and I'm looking for altcoins that I truly believe in. So I believe it's so important as a crypto investor to pick the narratives that you have conviction in. If you understand DeFi and you have a good understanding of the market dynamics, you should prioritize that sector. If you really understand crypto gaming and you're a gamer and you really understand the value proposition there, you should look towards those projects, because it's so important in this market that you only hold things you actually have conviction in. Because if we do get some sort of altcoin reckoning and alts continue to bleed versus Bitcoin, let's say they go down another 50%, are you going to be fumbling the bag at the bottom, or are you going to continue to lower your cost basis by buying more? Now, in order to have the conviction to buy more, you've got to really believe in what you're buying. So right now is the time to get your list together of the projects that you really want to buy and really want to accumulate. Because if we do get altcoins that start to bleed, you're going to know exactly what you want to buy. Now, I'm going to talk through a few of the things that I'm looking at buying. The first thing is GambleFi. I think Rollbit's the leader here, and I'm continuing to add to my Rollbit position as we go lower. Hopefully we get sub 10 cents again, but maybe 12 to 14 cents. I'll do a bit of DCAing, and I'm also keeping my eyes on new casinos. So that is something that I'm looking at. I think GambleFi still has some room to run, and I'm always on the lookout. The next sector that I'm looking at is L2s. I'm heavily interested in this EIP 4844 narrative. that, as you can see in front of you, is going to reduce the cost of gas fees significantly on layer 2s. I think this will be a catalyst for layer 2s heading into that event. And because that event's happening in December, if we do get the timeline lining up with an altcoin reversal, let's say September, October, maybe even November, I think because these have the strongest narrative in the market, they could bounce the most in the immediate terms. They become attractive propositions from that perspective. Now, which L2s am I looking at in this narrative? Well, I think a lot of them can perform well. But for the safer, mid to large cap plays, I think Arbitrum around $1 is starting to become an attractive look. I also think Optimism is an attractive look considering their partnership with Coinbase, DBank, Mantle, etc., as you can see in front of you. So those are two I'm watching. The other thing I'm watching is unique narratives like privacy. So one of our show sponsors, Tomi, has a suite of privacy products. One of them is DOP. Now, this one I'm really interested in because it essentially enables you to transfer assets without having to reveal those assets to the public. So you could have an NFT in your wallet, for example, that you want to show off to people, but you might also have Ethereum in that wallet that you don't want to show off to people. And you can essentially choose what you want to disclose and choose what you want to enclose. So I think privacy next cycle is going to be a big narrative. I don't think we've fully seen protocols come to life. So I'm always on the lookout for new protocols in this sector, and DOP's one of them. I think they have a token sale soon, but of course, do your own research. They are a show partner. But the reason we're partnered with them is because I think it's a really cool trend and one that I'm actively on the lookout for. And Tomi's essentially their mothership, which launches a lot of these products. So that might also be something to look into as well. If you're interested in DeFi, I think FRAX share could be something to look at. It's very interesting. They've got exposure to not just the decentralized stablecoin trend, but also liquid staking. They were actually one of the fastest growing ETH liquid staking providers, if not the fastest on the market. So FRAX is definitely one I'm looking at. And what I'm trying to do is just back teams that have shown the proficiency to continue to ship great products and great code over the duration of the bear market. FRAX has been one of them, and I actually just integrated with 𝗕𝗬𝗕𝗃 today, and we're seeing them continuously innovate. So they're a good one, but always bet on teams that continue to innovate. Now, this video isn't a shill. I'm not shilling my bags. In fact, I barely own any FRAX share. This video is to give you the idea that I'm starting to look at narratives to accumulate. This video is to give you the idea that you need to start looking at the sectors and concentrating on the sectors that you want to scoop up if we do get an altcoin reckoning. Because I don't think it's good enough just sitting on the sidelines and saying, "I'll wait," because then the dips will come and you don't know what you're buying. So I'm not saying these are all the tokens I'm buying. Of course, there are more tokens. There are some I'm not going to mention in today's video. But the point is, now is the time to start preparing. And if FRAX is one of them, add that to your watch list. Solana as well. If you believe in the L1, the Alta 1 thesis, I know the L2 narrative is super strong right now, but if you think there will be other proprietary L1s that can perform really well, then maybe look at something like a Sol, which has a really strong dev ecosystem and has a lot of great DeFi product shipping. You could get a good look at this at even lower prices. I think TraderXO posted a chart showing a $14 support for Solana. Scary stuff, but if you're in a position where you believe in it, then $14 would be a big opportunity for you, and you probably wouldn't panic when we get down there. Another one that I'm looking at, coincidentally, another sponsor of the show is OpenExchange. I'm actually looking at buying some OX tokens just because I think, look, they have had a huge run-up. And I'm not going to give you financial advice as to whether to buy or not to buy because they are a show partner. However, I am looking into this because I think I really like what Carl and Zhu are doing. Look, I know it is a kind of contentious subject because it's kind of like a hated narrative in the market, right? But I do see the value here in a new exchange that has the propensity to list new coins super quick, gain traction super quick, and ship code super quick. And OX has been an interesting development because they've introduced this staking function, which you can see in front of you, which enables you to earn yield on your asset, reduce fees on the platform, as well as earning airdrops. So just for staking, you can earn access to their airdrops. As we can see at the moment, they're currently running their Justin Tokus airdrops as part of their real world asset RWA initiative. So this is one that I'm looking into. And it's not just the token, it's just the platform in general that's showing growth. So I'm always looking for platforms in this market that are showing growth even in the midst of a bear market. And OX, irrespective of the fact they're a show partner, has shown this. But of course, do your own research, not financial advice. I want to make that clear that I'm just giving you examples of narratives that are performing well, and you can look into them in your own time. But don't get too caught up in what's popular and what's not. Like, look in front of you. Some of the most hated coins, Rollbit, 𝗬𝗎𝗎, OX. These have been some of the best performers over the last few weeks. So don't always get too caught up in what's popular and what's trending online. Sometimes, especially on Twitter, the tokens that are hated actually end up performing the best. So just remember, the market doesn't care about your bias. And if there's an opportunity to make money and your goal is to make money, well, try and take that opportunity irrespective of what the market thinks, because it's crazy. Some of the most loved coins have been the worst performers. Some of the most hated coins have been the best performers. And you always want to be on the lookout for outliers. The other one is 𝗕𝗬𝗕𝗃 and meme coins. If you're trying to left curve next cycle, then you may get good looks into accumulating Doge and 𝗕𝗬𝗕𝗃 at historically low levels. 𝗕𝗬𝗕𝗃 hitting prices we haven't seen since the early days of its launch, and Doge also retracing after that Elon pump. So needless to say, there is a lot of opportunities out there, but now's the time to refine your watch list. Now's the time to pay attention, because if we do get a bleed from altcoins, you want to make sure you have a plan to accumulate these alts at potentially generational prices. And I get excited about the opportunity of getting some of these entries, because I know what's going to happen next cycle. And we've seen this time and time again, where when people start to get despondent, when they lose hope, when they think there's never going to be another cycle, that's when they get surprised. And yes, we don't know exactly when it's going to be. We don't know if it's going to line up exactly with last cycle. We don't know when, but we know that if you have conviction and you stick around and you invest in quality, you're putting yourself in a much better position to benefit next cycle. And I'm really excited about the opportunities that we're going to get potentially over the next few months to accumulate, and maybe even into Q1 next year if things are delayed a little bit. Because you can never predict exactly when the market's going to run, but you can start positioning. And to be honest, if we've got 6 months of accumulation here, I wouldn't be too mad, because that's 6 months longer that we get to stack. But we could see an acceleration over the next couple of months. And for that reason, I would really keep my eye on the charts that I showed you today. Bitcoin dominance, but more importantly, that ETH BTC chart. Please, please, please chart it. And I'll, of course, give you updates on that chart on the show, because that's going to tell us when we want to go heavier into alts. I am starting to scale into narratives I believe in, but I'm not going too heavy yet until we get the alts bleeding a little bit more. Then I'm going to go more aggressive, but I'm just waiting for that really red day in the market, and then I'll start to position. But of course, I stick to my normal DCA plan, and I've already started accumulating some quality coins and starting to stack up a little bit. But yeah, still have a lot of stables ready to deploy. So that is my update. I hope you guys enjoyed the video. If you did, let me know in the comments below that you enjoyed it. Smash the like button, and I will see you tomorrow. Peace out.